Good morning, this is Sam Gurung from Beta 2 Limited. Date today is the 21st of July 2015, coming to you with this morning's market report. Let me start by looking at equities. European stocks slightly up this morning, Asian stocks also up overnight. This is mainly on back of weaker yen in Asia, helping sort of Japanese stocks, its exporters. But in Europe, the main reason why equities are up is basically on back of a lack of news, data, any sort of developments. So focus is basically on sort of Greece situation. Now last week Greece actually averted default, and on back of that there's general optimism, at least for short term, which is keeping market buoyant, and equities are up slightly. At the same time, we're also seeing Chinese stocks rebound. In fact, it's actually rebounded 14% since 8th of July. This was when Chinese stocks actually fell over 30% on back of slowdown in China, but obviously since then government intervention has led Chinese stocks to actually rebound. So overall, it's been good and bullish, couple of days for equity markets. However, what hasn't been good is actually the commodities. Commodity prices have been slumping. Commodities actually taking absolute routing at the moment. And when we look at sort of commodities in general, I'm talking about oil, industrial metal, even gold and silver. In fact, oil is down over 50% this year, but it fell 10% last month. This is basically on back of situation in Iran. Obviously, we know that sanctions were lifted in Iran last week, which means that we may see new Iranian oil coming into the market, extra supply, and on back of that, oil is down. But at the same time, due to slowdown in China, we're also seeing industrial commodities like tin, nickel, copper down. In fact, all three of them are down over 20% on the year. Now, why are we talking about commodities and how does this impact the market? Well, commodity prices obviously impacts inflation, particularly in the Western economy. Now, with oil down dramatically, there's fear of deflation in the Western economies, in the US, in the UK, which also then impacts the central bank's decision. Now, right now, the expectation is that the interest rate will go up around or sort of end of this year in the US and early next year in the UK. Now, with fear of deflation increasing, this may be pushed back, and therefore it may impact currencies like dollar and pound. Now, right now, in terms of currencies, what we're seeing is what we call sort of divergence trend. So currency markets are basically moving on back of expectation of central bank policies, i.e. dollar is up at the moment, particularly against the euro. The euro is down around about, so trading near 3-month low at the moment, and that's purely because interest rates are expected to go up in the US, while the Euro ECB are doing QE at the moment. Now, back with that, because of policy divergence, we're seeing certain currencies go up versus another. Now, with deflation fear increasing, this obviously changes the dynamics. So on back of that, this may impact the currency markets fundamentally. Eventually, it does obviously affect the technical, which our traders will pick on, but ultimately what may move it are the fundamentals factor, certainly the policy divergence. So with commodity prices falling down at the moment, it could be crucial for the currency markets for the sort of coming weeks and months. So that's the sort of current update at the moment. So in a nutshell, equities are up, commodity prices are falling down at the moment, and in terms of currencies, we're seeing dollar and pound strong. Commodity currencies like Australian dollar, New Zealand dollar, Canadian dollar weak, and euro obviously down on back of policy divergence. That's it for today. I'll see you again tomorrow. Thank you very much.